In the world of investing, FedEx Corporation is a stock that often carries a handle with care label, much like the packages it delivers. This stock, while potentially lucrative, is not without its risks, and is certainly not for the faint of heart. As we gear up for FedEx Corporation's Q1 earnings, set to be unveiled this coming Wednesday, we're faced with some disconcerting projections. The anticipated EPS has taken a downward turn, falling 36.4% to $3.74 per share. Revenue too is expected to follow suit, with an anticipated drop of 11.8% to $21.802 billion. Despite surpassing EPS and missing revenue in the previous quarter, the company projects a higher EPS but lower revenue year over year for this quarter, painting a rather mixed picture. Digging deeper into the workings of FedEx, we find a company in the throes of a significant transformation. Their objective? To build the world's most adaptable, efficient, and intelligent network. To achieve this, they've launched the One FedEx strategy and kickstarted the Drive initiatives in a bid to slice costs. Last year's earnings surpassed the midpoint of their March outlook, but will it be enough to weather the storm? The previous quarter saw a 10% year-over-year drop in revenue, largely due to subdued market demand. Despite this setback, FedEx managed to maintain an operating margin of 6% and pulled off an adjusted operating profit of $1.8 billion, showcasing some operational efficiency. Changes are also afoot in their express and freight segments. FedEx is aligning costs with demand, retiring aircraft, and even planning to shut down and merge 29 locations. It's evident that they're pulling out all the stops to harmonize their cost structure with the challenging revenue climate. When it comes to cost reduction and transformation, FedEx is certainly not lacking in confidence. They've already slashed operating costs by $2 billion year over year, and are aiming to deliver $4 billion in permanent cost reductions by fiscal year 2025. The company has also set its sights on a transformation in its Canadian operations by April 2024, expecting an annualized benefit of over $100 million upon completion in fiscal year 25. Looking ahead, FedEx has a cautious, full-year outlook. Their projected EPS for fiscal 2024 ranges between $16.50 to $18.50. Although they expect margin improvements, they also anticipate volume reductions and yield pressure to impact their freight margins. On the financial front, FedEx is committed to responsible capital allocation. They plan to repurchase $2 billion of stock in 2024 and increase the dividend by 10%. They're also planning an $800 million voluntary pension contribution. While FedEx is navigating through transformations and cost-cutting measures, the financial trends are indeed worrying. If you're considering this stock, proceed with caution. The forthcoming Q1 report should provide some much-needed insight. For those interested in delving deeper, join a community of like-minded traders, the details of which can be found in the description below.
Arieous Invest. Trading reimagined.